The Nifty Bank slips below 51,000 and the Nifty slips below 25,000 with the Midcap index losing over 1,300 points as volatility grips the Wall Street. Utilities, industrials and energy are the big drags even as IT manages to eke out some gains.
The raft of business updates from prominent lenders, including the likes of IndusInd Bank, Federal Bank and Bandhan Bank, point to a rush for deposit lending, leading to a swelling of bulk deposits even as loan growth is tempered.
Titan and Kalan Jewellers report strong jewellery sales in the second quarter following the import duty cut on gold. Despite the inauspicious Shraddh period, most jewellers line up store expansions to ride the trend.
State Bank of India has categorized its MTNL exposure as non-performing asset. The move comes amid reports of government working on reviving its telecom arm. The bank warns of legal action in case of default.
Good afternoon, you're watching Business Lunch on CNBC TV18. I'm Hormas Fatakia. With me in a green jacket is Winnie Motiwala, but the screen above us is anything but green.
I was hoping it would be a better day today. Really, I was just hoping for it, given that the cues from US market were not bad. But clearly, that's not shaping up well. I think lowest point of the day.
Lowest point of the day indeed. And we carrying on from where we left off over Friday's trading session. There's a sixth day of losses now for the index, down to the lowest point of the day, 360 points off the highest point. We opened in the green yet again, and similar to Friday's session, every single bounce is getting sold into on the index, and the current levels where we are, it's almost a 1,500 point drop on the Nifty from the record highs that it had made on the 27th of September. Almost every sectoral index is in the red, barring IT. The Nifty Bank has slipped below that mark of 51,000, which means it has given up all the gains that it had made starting the 11th of September, from where it had moved almost 3,500 points towards that record high of 54,467. It has reversed all of those gains. And what's leading the losses? HDFC Bank, as it was the case last week as well, contributing almost 50 points to the index downside. Reliance Industries too now has slipped to the lowest point of the day. 23 points is what is contributing to the index downside. Reliance Industries, mind you, was down 9% last week. It was one of the biggest weekly falls in a year that the stock had seen, but significant pain in the broader markets as well, Winnie.
Significant pain. Look at the Midcap, also down more than 1,000 points today itself. 1,300 is what we're seeing for the Nifty Midcap. Now 1,700 now that you're seeing the downfall coming in. So down more than 2% in trade as the Nifty Midcap. Small cap too, not anything in terms of a respite that's coming in there. So clear underperformance that's coming also from the broader markets today. A lot of names that are not doing well. So, pull up something like a Jubilant and Gravia. Railway stocks also. So RVNL, that's down and out in trade. We have Realtel Corp, that's also quite subdued in trade. And Bombay Burma is among the top Nifty losers that you're seeing in terms of the Nifty 500. So yes, keeping an eye out on all these names today. Not much of an excitement. Just one stock that I want to specifically highlight that is in the green today, on the back of a news flow that we have is Natco Pharma. That's holding on to green, a positive side, 2-3% gain is what we're seeing coming in. And this is on the back of Mylan and Novo, which has reached a settlement in terms of a drug. So because of that, some bit of a green there. But other than that, not much green, only red is what we are watching out for today. And, how much more is the fall going to be is what I am looking at right now, and where we would be ending. But yes, Nifty 24,798 around that.
Very crucial level, that 24,800, right? Gautam Shah also mentioned earlier this morning that if we slip below this mark of 24,800, we might see levels of 24,000 on the index. But we'll keep an eye out on the markets through the show. But beginning the show with some buzzing names as well. Kalyan, Titan, both of them are seeing some bit of green on the screen on the back of their business updates. Mangalam is joining in with more on that. Mangalam, how were the updates?
Well, the updates were good, but the stock price not as much. The reasons for that I will just tell you in a bit, because Titan is among the top Nifty losers. Even Kalyan is down by about 4%, and this despite a decent update coming in. For Titan, for instance, the jewelry business this time around grew by 26%, and this has been led by around mid-teen sort of like-to-like growth coming in the domestic operations as well. For Tanishq's base, this is quite commendable and a good achievement as well, especially after the muted first quarter that we saw. The company attributes this to the bump up in demand that happened after the government announced the customs duty cut on gold itself, which more than offset the lull that these guys saw in the Shraddh Shraddh period as well. Why is the stock lower then? Because of a couple of factors. One, the non-solitaire studded segment, while it grew well, the solitaire business has not done well, telling you that the studded business for Titan has just grown in low double digits, which impacts the margins. At the same time, the street believes that maybe there has been some preponement of purchases on account of the customs duty cuts. So have this street factored in, borrowings from the third and the fourth quarter revenue growth into the second quarter itself is something that we'll have to monitor. For Kalyan Jewellers as well, on a low base, the company grew by almost 37%. The India operations growing at around 39% as well. Same store sales growth of 23%. Here too, the demand jump through customs duty cut has offset the lull in Shraddh. So is this sustainable or not is the big question at a time that all these companies are going ahead and increasing their networks as well. For Titan in particular, what I'll be watching out for is the X of gold price hike. What has been the volume growth and particularly the margins. You'll have to watch out for margins because Titan had lowered their margin guidance to around 11% earlier itself. Can it sustain around that? And, what kind of trends they've seen in the festive season is something that we'll be tracking for both Titan as well as Kalyan. Good updates coming in, but is the best already in the price is the reason that, the stock is, both the stocks are actually seeing a bit of a decline.
Okay, thanks so much for that there, Mangalam. But Titan, Kalyan down and out. But other stock that is down and out is also Ola Electric, not performing well for some time, Hormaz. And, obviously we've seen those higher discounts coming in. There were brokerage notes that came in on that front as well. Today, although the stock is down 8%. So, specific reasons that one should be highlighting. It's getting electrocuted in trade for a while now.
Well, it's not been a single day, right, since it listed that the stock has not been in the use. To almost 2 months now to its listing for Ola Electric, listed at its IPO price of 76, and within a few days, it is on the 20th of August, it made a post-listing high of 157. It was more than double of its IPO price, and since then the stock is now 43% lower from its post-listing peak, and that is the significant downfall that we've seen. A part of that reason also comes because of the fears of the loss in market share that Ola Electric is having. It started off the year with almost a 50% market share, that is almost half now to 25%. And where is it losing market share to? To the legacy players, of course. Bajaj and TVS been ramping up their EV operations. Bajaj Auto has made some significant commentary as well with regards to their EV operations. Both started off the year at around 12%. Now both of them are at 20% each. So losing market share is one reason why Ola Electric is facing some pressure on the street. We spoke to Bhavish Agarwal as well last month, and he mentioned about this profitability as well. They reported a net loss in the first quarter after their listing. They mentioned that they're very close to break even on the EBITDA level, is what he said. And the market share and the situation will improve as their penetration increases, is what he had mentioned. But the current furor over Ola Electric right now is with regards to its customer service, and a lot of social media has been abuzz with this. And HSBC just last month, just a few days ago, had come out with this note that they had visited multiple Ola Electric showrooms which were overwhelmed with a lot of these services requests, and there is an acute shortage of skilled manpower in a lot of these service centers. And they've said that this service quality is one aspect that Ola Electric will have to improve before it launches its motorcycles in the market. That is one thing that HSBC had mentioned, and as if that they've taken multiple steps to improve those problems, and they are transitory, and as a result of which they still have a buy rating on the stock. But this is because of this that there is, even yesterday there was a lot of talk on social media with regards to Ola Electric, and that's showing up in the stock price as well. 9% lower now, well below that mark of 100, and almost 45% below its post-listing peak.
Oh, that's a sharp fall that we're seeing coming in. But, that one point you highlighted also in terms of service and skilled service required, labor, that is something that becomes a worry for EV because it's Indeed. A newer place as well. But that's Ola Electric. Let's move on and get you an update on the former Tata Group Chairman, Ratan Tata, the industrialist, has taken to Breach Candy, was taken to the Breach Candy Hospital in Mumbai earlier today, and has actually issued a clarification on his health, stating that rumors regarding his poor health are unfounded and he is undergoing medical checkups due to his age and related conditions. He also reassures well-wishers that there is no cause for concern over his health.
Important clarification coming in there from Ratan Tata. Now, the two-day RBI Monetary Policy Committee meeting is currently underway to decide on key policy rates. The CNBC TV18 Citizens Monetary Policy Committee expects a status quo on rates, but a majority expect a change in stance to neutral, which will facilitate rate cuts in the near future. Take a look.
What will the Reserve Bank and the MPC do to rates? Let me start with you, Sajid.
Hold rates, they'll pause.
Hold. Okay, hold. Shaumyo?
It's
Hold. Okay. Sonal?
They should cut 25 basis point.
Here's the first cut. Samiran?
No change.
3:1, sir, in favor of hold. Dr. Chairman?
Hold.
Hold. Okay, so it's 4:1 in favor of holding the policy. Change of stance. Will the MPC change its stance from the current withdrawal of accommodation? Sajid?
change to neutral.
Oh, okay. Sonal?
Change to neutral.
Obviously, you voted for a cut. Samiran?
Hold on to the stance,
Hold.
but it's going to be a close call.
Okay. Shaumyo?
You'll hold on to the stance.
Okay. 2 holds, 2 change to neutral. Dr. Sen?
Change to neutral.
Change to neutral. I think your members are veering to your point of view. Now, the final question, when do you see the first rate cut? Sajid?
We're looking at December.
Okay. Sonal, I think yours is October, right?
Yes.
October. You already said that. Samiran, your first rate cut?
February or April.
Okay. Shaumyo?
February.
Dr. Sen?
Yeah, I would go with February or April.
Okay. So there you are, the majority expecting the first rate cut only next calendar, but there are at least 2 people dissenting and 1 expecting a cut right away. Makes it a very interesting policy.
Absolutely, an interesting one in terms of the MPC that we're keeping an eye out on. But on that note, let's just slip into a very short break. After the break, we'll come back with more updates and news on the other side. Welcome back. You're watching Business Lunch on CNBC TV18. Let's move on. And State Bank of India has downgraded MTNL's account to NPA category, and this is with effect from 28th of September. Ritu is joining in with us to give us those latest updates. Ritu?
Well, that's right. We've been reporting that as of the second quarter, most of the lenders to MTNL will start downgrading the account on account of MTNL not really honoring its dues. And SBI is the latest one after Bank of India and Union Bank of India to tag the account as an NPA. But the exposure amount isn't very large for State Bank of India. It's about 325 crore rupees, out of which the outstanding dues are to the tune of 280 crore rupees, which in a letter to MTNL, it has asked them to regularize in order for them to reverse the status of the account. Now, in this letter, State Bank of India has also sought various details, for instance, on the status of the land monetization to be able to recover its dues, on the recent MOU that they had signed with NBCC to develop about 13 acres of a land parcel in New Delhi for the liquidation of that to be able to recover dues. And lastly, SBI has also said that if none of these steps are taken, it will be forced to take legal measures, to get the repayment back from MTNL. Now, keep in mind, this is a state-run company. There have been reports with State Bank of India itself as questioned, saying, the DOT said there would be no default and, the government would back the company and so on. And it has sought the status on that from MTNL. As far as we understand, the recast proposal earlier in June was rejected by the lenders. So we'll have to see what new plan the company now comes up with to repay its dues. The total outstanding from banks is close to 8,000 crores for MTNL.
Thanks a lot for that. We've been updating on this for a while now, as Ritu just mentioned. And time to get to a CNBC TV18 exclusive. Shireen Khan caught up with Makhtar Diop, the managing director of IFC, who revealed his plans to actively invest in Bollywood film production companies in India. Listen into a slice of that conversation.
That the world is changing, and there are some things which were not part of the world. We're not talking to each other, and I think that it's important that they talk to each other because of job creation, because of social impact and so forth. And I'm a passionate of art, so I can see the value personally of it. If you think about Bollywood, for instance, if you want to change the social norms in a country and have the development rules that you want to have in terms of gender equality and so forth, movies are extremely popular, powerful. So for me, it's not only about financial investment and return. I'll come back to that. But it's also the impact and really change.
Okay, you can catch the full interview today at 7:30 p.m. But let's move on. And Maldives President Mohammad Muizzu arrived in New Delhi last evening for his first bilateral visit to India. Earlier today, President Draupadi Murmu and Prime Minister Narendra Modi welcomed Muizzu at the Rashtrapati Bhavan. Later, the Maldivian President and PM met at the Hyderabad House for their bilateral talks.
Time for a short break here on Business Lunch. Up next, Money Control asked a bunch of market experts and conducted a poll with some key questions regarding the outlook on the Indian markets. Stay tuned the other side of this short break. We'll be right back. Welcome back. The Nifty now well below 24,800. But where is the market headed now? Money Control asked a bunch of market experts and conducted a poll with some key questions. Vinny has hopped over to the wall with the key takeaways. Vinny, over to you.
Absolutely. And, in such a time, we really want to know what's going to be happening to the markets. And the latest finding from the Money Control's expert poll on the Indian market is indicating that it is currently seeing it as expensive. And most of the experts believe that there's a potential 10% correction from the current levels. And this is despite the correction we've already seen in the markets from those recent highs. So, yes, there's a bit of a worry. Now, let's look at the key questions that these experts were asked. The first one was in terms of the geopolitical tension as well as the China risk that's increasing, given that the government had announced China stimulus over there. So what is that going to be? Is that going to be more of a worry versus the past that we've seen in terms of events? 52% believe that that could be a big risk coming in, while 48% believe no, that's not much of a worry coming in. So yes, China factor as well as geopolitical tensions, most of the experts believe that that is a bigger risk that we're watching out for. Other than that, let's move on to the next one. The biggest risk that they're facing in the market today. What is the biggest risk that one is seeing? When it comes to the biggest risk, a significant of 44% of the panels and experts believe and point out to high market valuation. Is it overvalued? The Indian markets are overvalued? Yes. High valuations, 44% believe that. Other than that, following closely there is earnings disappointment. They believe that that could be a big risk for the markets. 36% of that experts believe that that is a risk there. And obviously, there is a threat that comes in from the geopolitical tension. It's an important one as well. But 20% believe, and that seems like that's taking a backseat, that, in terms of domestic factors, could be more of a play than geopolitical tensions in terms of the risk for the Indian markets. Now, what everyone is closely watching out for is where is the Nifty going to be headed? Where is it going to be closing in 2024 calendar year? 16% experts believe that we could see a dip below the 23,000, while 23 to 25% believe 23 to 25,000 mark is what they believe. 32% see that in the range that we could see a close coming in there. 25 to 27,000, we have around 48%. So majority believe that that is the range where it will be closing, while about 27,000, very few that are very optimistic on the markets right now. It's just 4% of the experts believing that. In terms of deployment of cash, where should they be deploying their cash in the near future? What are experts looking at? Most of them highlighted in terms of 76% of them said that they would be looking at large caps, while 24% said mid and small cap is something that they would still be looking at. Let's not forget, we had seen that trend changing because mid and small cap was the trend last year. Seems like that's going to be changing given the market sentiment is falling as well as the outlook is a bit bleak. So concerns on that front. And lastly, in terms of what they're saying in terms of respondents that believe Indian markets are currently overvalued or very expensive, then we do have a good percent of 64% people and experts believing that it is expensive, 36% believing it's reasonable, while just 0%, not just 0% said that it is cheap. So yes, no one thinks Indian markets are cheap, and that's what we're looking at. And maybe that fall something is what we could merit also right now coming in the markets on that front.
Vinny, thanks a lot for that. And on that note, it's time on this edition of Business Lunch from Vinny, myself and the team that put this show together. Thank you so much for watching. We leave you with the markets at the lowest point of the day. Midcap Radar takes the action forward.